Welcome back to the deep dive. I'm really excited for this one. We're going deep into business structures today.
Oh, yeah.
And you send over some really interesting sources.
Mhm.
We've got case studies on companies like Myer,
Yeah.
JB Hi-Fi, even Rip Curl.
It's a good mix.
It's just amazing to see how different companies, big and small, have navigated all this.
It is fascinating, yeah, how that choice of legal structure can really make or break a business,
Yeah.
impacts everything,
Yeah.
from growth potential to personal liability for the owner.
Before we jump into those juicy real-world examples,
Okay.
let's set the stage a bit.
Yeah.
Can you give us a rundown of the basic legal structures out there? I'm sure our listeners are familiar with the terms, but a refresher never hurts.
Right. We can think of it as like a spectrum of complexity.
Okay.
You have your sole trader, the simplest form where one person runs the whole show.
Right.
Then there's the partnership where two or more individuals team up. Then, as things get more formal, you have private limited companies, the PILI LTDs we often see,
Yeah.
and finally, the behemoths, the publicly listed companies.
Okay, so that's the who's who of business structures.
Right.
But how does someone actually decide which one's right for them?
Yeah.
What are the key questions they should be asking themselves?
Well, I always say it boils down to three fundamental factors: control, risk, and cost.
Okay.
A sole trader has absolute control,
Right.
but also shoulders all the responsibility.
Uh-huh.
And if things go south, their personal assets are on the line.
Hmm.
That's where incorporating comes in. It creates a separate legal entity offering some protection.
Right.
But this obviously comes with additional setup and ongoing costs.
This brings us to a question I've always been curious about.
Hmm.
What about those tax implications everyone talks about?
Yeah.
How do they differ between these structures?
Ah, yes, the tax man.
Yeah.
A sole trader reports business income and expenses on their personal tax return.
Right.
Simple, but maybe not the most tax efficient.
Uh-huh.
A company, on the other hand, is taxed separately,
Okay.
often at a lower rate,
Okay.
and you have more options for deductions.
Right.
Partnerships are a bit of a hybrid.
Right.
The income flows through to the partner's individual returns.
That makes sense.
Yeah.
Now, let's talk about going public.
Yeah.
Something we hear about all the time.
Yeah.
What does it actually involve?
Okay.
And how does it differ from a private company?
In Australia, this is all about the ASX.
Right.
The Australian Securities Exchange.
Yep.
Going public or floating a company
Mm-hmm.
means offering shares to the public for the first time.
Uh-huh.
An IPO.
Right.
It's like opening the doors to a massive pool of investors,
Yeah.
giving access to huge amounts of capital.
Oh, yeah.
But like everything in business, this comes with trade-offs.
I bet it does.
Yeah.
More money often means more problems, right?
Well, not always problems,
Okay.
but definitely more scrutiny.
Yeah.
Public companies are under the microscope.
Yeah. They have to disclose a lot more financial information
Yeah.
and adhere to stricter regulations.
Right.
They're accountable to a whole lot of shareholders now.
Yeah.
Private companies have more flexibility and control, but their growth can be limited,
Right.
especially because they can't just have anyone as a shareholder.
So it's a classic trade-off.
Mm-hmm.
Control versus access to capital.
That's it.
Makes you wonder if those founders ever regret going public when the pressure's on. Now, to really see this in action,
Okay.
let's delve into the case studies you brought.
All right.
First up, we have Helen De Silva, a psychologist running her own practice.
Yeah.
I understand she chose the sole trader route.
That's right. And her story's particularly interesting considering the recent trends.
Okay.
The Australian Bureau of Statistics has actually reported a surge in the number of sole proprietorships. Seems like this structure is resonating with a lot of people.
It makes you wonder why.
Yeah.
I mean, Helen's a highly skilled professional.
Right.
Why not incorporate and potentially shield herself from liability?
Yeah.
Was cost the main driver, or are there other aspects at play?
Cost is definitely a factor.
Yeah.
Setting up and maintaining a company can be pricey, especially for someone starting out.
Yeah.
But Helen also talks about valuing control and simplicity.
Okay.
She enjoys being her own boss and not having to deal with the complexities of a more formal structure.
So it's not just about the bottom line,
No.
but also about the lifestyle and values of the entrepreneur.
Exactly.
Makes you wonder, though, about the potential downsides.
Mm.
Does she ever worry about the unlimited liability?
She does.
Or maybe feel isolated without partners or a board to bounce ideas off?
She does mention the isolation aspect as a challenge,
Right.
but she's found ways to connect with other professionals in her field
Okay.
for support and collaboration.
Right.
As for liability, she has professional indemnity insurance to mitigate some of the risk.
Okay.
But it's a calculated risk, no doubt about it, a gamble that many sole traders are willing to take.
It's a great reminder that there's no one-size-fits-all solution in the business world.
Nope.
Every structure has its own set of pros and cons.
Yeah,
And it's all about finding the right fit for your individual circumstances.
exactly. And that's what makes these case studies so illuminating. They
Yeah.
show us the real-world consequences of these decisions, both good and bad.
Now, let's shift gears from the solo act to a company that's had quite the dramatic journey.
Okay.
Myer.
Myer.
I mean, they've practically run the gamut of business structures, haven't they?
Meyer's evolution is a textbook example of how a business's legal structure can change over time,
Yeah.
often mirroring its fortunes.
Yeah.
They started small, incorporated, went public, merged with another company, went back to private, and then public again.
Wow.
It's a real roller coaster.
That's incredible.
Yeah.
Talk about keeping your lawyers busy.
You would think.
But why all the back and forth?
Yeah.
What were the motivations behind these major shifts?
Each change was likely driven by specific business needs and goals at the time.
Right.
Going public, for example, gave them a massive injection of capital to fuel expansion. But later on, they faced declining profitability and a rapidly changing retail landscape.
Okay.
Those pressures probably led to some restructuring
Yeah.
and eventually going private again for a period.
So it's not just about choosing the right structure at the outset,
Yeah.
but also about adapting and evolving as the business grows and the market shifts.
For sure.
But wouldn't you say going private then public again is a bit drastic?
It's certainly a bold move.
What were they hoping to achieve with that?
Going public again likely aimed to raise capital to tackle new challenges,
Okay.
maybe invest in online capabilities or revitalize their brand. But it also exposes them to market scrutiny once more.
Right.
Their share price will be a constant barometer of public confidence in their strategy.
Makes you wonder if they considered alternative paths.
Yeah.
Could they have achieved similar goals through strategic partnerships or maybe even divesting some parts of the business?
Those are excellent questions, and unfortunately, we only have so much insight into their internal decision-making process. But it certainly raises the point that there are often multiple paths to addressing business challenges.
Okay, so we've seen the solo act and the corporate giant.
Yeah.
Let's move on to another success story, JB Hi-Fi.
Okay.
They've gone from single store to a publicly listed powerhouse.
Okay, have.
What were some of the key decisions that fueled their incredible growth?
JB Hi-Fi's success is a fascinating case study in strategic decision-making. Expanding nationally, acquiring competitors like the good guys, and venturing into new product categories all played a significant role. And underpinning all of this was their access to capital,
Right.
a direct result of becoming a public company.
That access to capital is often cited as a major advantage of going public.
It is.
But was it really the key to their success? Or were there other factors at play?
You're absolutely right.
I mean, plenty of companies go public and still flounder.
Going public simply provides the potential for growth.
Yeah.
It's not a guarantee.
Right.
JB Hi-Fi's success is also rooted in their deep understanding of their target market and their ability to adapt to changing consumer behavior.
Like their savvy response to the pandemic.
Precisely.
While other retailers were struggling, JB Hi-Fi saw their sales skyrocket as people invested in home entertainment and tech.
They were able to capitalize on that shift in demand
Yeah.
because they had the infrastructure and the inventory to meet it.
Right.
Their supply chain held up remarkably well compared to many others.
Yeah.
And they quickly ramped up their online presence, ensuring customers could still shop safely and conveniently.
So it was a combination of factors.
It was.
Strategic acquisitions, smart inventory management, a robust online platform.
Yeah.
And, yes, the financial resources to make it all happen.
Well,
Their story really highlights that business success is rarely a result of one single decision,
I agree.
but rather a series of well-executed moves, often in response to both opportunities and challenges.
Exactly. And that adaptability, that ability to pivot and seize the moment,
Yeah.
seems to be a common thread among successful businesses, regardless of their legal structure.
Now let's move on to our final case study, Rip Curl.
Okay.
They took a very different path compared to the others.
Yeah.
Instead of going public, they built a global brand primarily through licensing.
Interesting.
Can you explain how that works and why they might have chosen this approach?
Licensing, in simple terms, is like renting out your brand.
Okay.
Rip Curl allowed other companies to use their designs and technology in exchange for royalties.
Right.
This allowed them to expand globally without the massive capital outlay required for building their own factories and distribution networks.
That's fascinating.
Yeah.
It's almost the opposite of Myer's reliance on physical stores.
Mm-hmm.
Did this licensing model give them more resilience? I mean, were they less vulnerable to economic downturns or shifts in consumer behavior?
It likely gave them a degree of flexibility.
Okay.
They weren't as heavily invested in physical assets.
Right.
And their revenue streams were diversified across multiple licensees.
Hmm.
However, it also meant they had less control over the manufacturing and distribution of their products.
So it's a trade-off again.
And another one.
Control versus scalability and reach.
Yeah.
Makes you wonder if they ever considered going public, especially as their brand grew and their licensing model proved successful.
They likely weighed the pros and cons at various points in their journey.
Yeah.
Going public could have provided them with even more capital to expand their own operations or acquire other brands.
But ultimately, they decided to sell to Kathmandu.
They did.
Why would a company at the height of its success choose to sell?
Yeah.
What factors might have motivated that decision?
We can only speculate.
Yeah.
But it's possible the founders were looking for an exit strategy. They'd built a global brand,
Yeah.
achieved significant success,
Mm-hmm.
and perhaps felt it was time to step back and let someone else take the reins.
Right.
Maybe they felt Kathmandu, with its expertise in outdoor apparel and retail,
Yeah.
could take the brand to the next level.
Or perhaps the lure of a hefty payout was too tempting to resist.
Oh, I'm sure that played a role.
It's a reminder that business decisions aren't always driven by pure strategy.
Right.
Sometimes personal factors like retirement plans or the desire for a change play a significant role.
Absolutely.
And those personal factors often intertwine with the broader market forces, creating a complex tapestry of motivations and outcomes.
Definitely.
So we've explored 4 very different companies, each with its own unique journey through the world of business structures.
It is fascinating to see them side by side.
But what can we glean from these examples? What are some key insights our listener can take away from these stories?
I think what's most striking is the variety of paths to success.
Yeah.
There's no one-size-fits-all answer.
Right.
No magic formula. The right legal structure is the one that best aligns with the business's goals, its values, and the ever-changing market context.
It's like choosing the right tool for the job.
Yeah.
You wouldn't use a hammer to screw in a light bulb.
Right.
But even with the right tool, you need the skill and strategy to use it effectively.
Precisely. And sometimes even with the best planning,
Right.
external factors can throw you a curveball.
Yeah.
Look at Myer.
Yeah.
They've faced some serious headwinds in recent years.
Hmm.
I'm curious, what were some of the strategic decisions or market forces that contributed to their struggles?
Yeah.
We often hear about challenges, but what specifically were they up against?
Well, from what I've read, one major misstep was their late entry into the online retail space. They were slow to adapt to changing consumer habits. And by the time they launched their online platform, competitors like Amazon had already established a strong foothold.
It's almost like they were caught off guard by the speed of that shift. A company with such a long history struggling to keep up with the digital revolution.
Yeah.
It's a cautionary tale for even the most established giants.
It makes you wonder if their legal structure played a role in their sluggish response.
Oh, interesting.
Did being a publicly listed company, with its focus on quarterly earnings and shareholder expectations, make them less agile and less willing to take risks?
That's an interesting question.
Yeah.
It's certainly possible that the pressure to deliver short-term results made them hesitant to make the significant investments needed to build a competitive online platform.
Right.
Private companies, on the other hand, might have more flexibility to experiment and adapt without the constant scrutiny of the market.
But wouldn't going private again have given them that flexibility?
Oh, yeah.
They did have that period where they weren't beholden to shareholders.
Yeah.
Why didn't they use that time to really transform the business?
Perhaps they did attempt some changes.
Yeah.
But the retail landscape had already shifted significantly.
Right.
They were playing catch-up at that point. And regaining lost ground is always a steep uphill battle.
Yeah.
It's possible that their existing infrastructure, their supply chains, their management culture were all geared towards a traditional brick-and-mortar model, making a swift and seamless transition to online retail a real challenge.
So maybe it wasn't just about their legal structure,
No.
but also about their operational model. their internal processes,
Yeah.
and their ability to embrace a new way of doing business.
Yeah, you got to be willing to change.
It's a reminder that change often needs to happen on multiple levels,
Yes.
not just at the top.
It's got to be all the way through.
Exactly. And that brings us to another interesting point.
Okay.
We talked about JB Hi-Fi's pandemic success.
Yeah, they did very well.
But was it purely strategic brilliance? Or was there an element of luck involved?
Yeah.
Were they simply in the right place at the right time?
Well, there's no doubt that the surge in demand for electronics and appliances.
Oh, yeah. Played a role in their strong performance. But they weren't just passive beneficiaries of the situation.
Right.
They made some shrewd moves that allowed them to capitalize on the opportunity.
Like, what specifically?
Yeah.
What set them apart from other retailers who also saw increased demand but maybe struggled to meet it?
One key factor was their inventory management.
Okay.
They had a robust supply chain and had wisely stocked up on key products in anticipation of potential disruptions.
All right.
This meant they were able to keep their shelves stocked
Yeah.
while competitors were facing shortages.
So they weren't just lucky.
Right.
They were prepared.
Yeah.
It's like that old saying, luck is what happens when preparation meets opportunity.
Exactly. They also had a solid online platform already in place.
Good.
They'd invested in e-commerce early on, recognizing the growing importance of online shopping.
Right.
So when lockdowns hit,
Yeah.
they were able to seamlessly transition to a primarily online model. Their click-and-collect system was particularly efficient,
Yeah, that's a good system.
allowing customers to order online and pick up their purchases quickly and safely.
Makes it so easy.
So it wasn't just luck.
Correct.
It was foresight and execution.
Yeah.
They saw the trends, they invested strategically, and they were ready to adapt when the unexpected happened.
I like that.
Now, let's shift gears to Rip Curl.
Okay.
We talked about their licensing model,
Yeah.
which allowed them to expand globally without going public.
Right.
But it's a very different approach compared to, say, Quicksilver or Billabong,
Yeah, very different.
both of which went public and then faced significant challenges.
They did.
Did Rip Curl's model make them inherently more resilient, or were there other factors at play?
Their licensing models certainly gave them a unique advantage.
Yeah.
They weren't as reliant on physical stores or their own manufacturing facilities. They could essentially ride the wave of global demand without taking on the same level of risk as their competitors.
But wouldn't that also limit their control over the brand?
Potentially, yeah.
I mean, if you're relying on other companies to manufacture and distribute your products, doesn't that create potential for inconsistency or even damage to your brand reputation?
That's a valid point.
Yeah.
Maintaining brand consistency and quality control can be a challenge with a licensing model.
Right.
Rip Curl likely had strict licensing agreements in place to safeguard their brand image and ensure certain standards were met.
Yeah.
But it's a delicate balancing act, no doubt about it.
And it makes their eventual decision to sell to Kathmandu all the more intriguing.
It does.
They were seemingly at the top of their game. Their brand was strong. Their business model was proving successful.
Yeah.
Why sell after achieving so much?
It's a question that has puzzled many industry observers.
Yeah.
Some speculate that the founders, who were getting on in years, were simply ready to cash out and enjoy their retirement. Others suggest that Kathmandu, with its established retail network and expertise in outdoor apparel, offered them an opportunity to reach a wider market and further expand the brand.
It's almost like passing the torch, isn't it?
It is, yeah.
And trusting their legacy to a company they felt could build on their success.
That's one way to look at it.
Yeah.
But it also raises questions about the long-term implications for the Rip Curl brand.
Right.
Will they be able to maintain their unique identity and culture under the ownership of a larger corporation?
Yeah.
Will Kathmandu prioritize growth over brand authenticity?
It's a dilemma many successful brands face when they reach a certain size.
It is.
Do you stay independent and try to control your destiny?
Yeah.
Or do you join forces with a larger entity and risk losing some of what made you special?
It's a tough call, and there's no easy answer.
Yeah.
It often comes down to the values and priorities of the founders and the perceived opportunities and threats in the marketplace.
So we've seen how legal structure can influence a company's growth trajectory.
Yeah.
Its resilience in the face of challenges, and even its ultimate fate.
It's fascinating.
It's a fascinating tapestry of strategic decisions, market forces, and personal ambitions.
Yeah.
But what's the overarching message here for our listener?
I think the key takeaway is that there's no single right answer when it comes to choosing a legal structure or charting a path to success.
Right.
What works for one company might be disastrous for another. It's about understanding the different options, weighing the pros and cons, and making informed decisions based on your specific circumstances and goals.
It's like navigating a maze, isn't it?
It is, a bit.
There are many paths. Some lead to dead ends, others to the finish line.
That's true.
But the journey is just as important as the destination.
Well said. And it's a journey that requires constant learning, adaptation, and a willingness to embrace both the opportunities and the challenges that come your way.
Now, let's shift our focus a bit.
Okay.
We've talked about the internal factors that influence a company's legal structure, but what about the external factors?
Yeah, good point.
How does the broader economic and political landscape play into these decisions?
That's a crucial aspect that often gets overlooked.
Yeah.
Government regulations, tax policies, even consumer sentiment can all have a significant impact on a company's choice of structure or its decision to restructure, merge, or go public.
For example, a change in tax law could make incorporating suddenly much more attractive.
Yeah, that happens.
Or a shift in consumer preferences towards online shopping could force a traditional retailer to rethink its entire business model.
Exactly, and on a global scale.
Yeah.
Factors like trade agreements, currency fluctuations, and geopolitical events can create both opportunities and threats for businesses of all sizes.
It's like trying to steer a ship through a constantly changing ocean current.
Yeah.
You need to be aware of the winds, the tides, and the potential for storms.
It's a complex web of interconnected forces. Yeah. And understanding those forces is essential for making strategic decisions that will position your business for long-term success.
This has been such an eye-opening conversation.
It has.
We've gone from the nuts and bolts of legal structures to the broader forces that shape the business landscape.
A real deep dive.
It's amazing to see how these seemingly dry topics
I know, right?
can actually tell such compelling stories about ambition, innovation, and the constant struggle to adapt and thrive in a world that's always changing.
Yeah.
It really is. And I think for our listeners clearly diving deep into these topics, it's a reminder that business isn't just about spreadsheets and profit margins.
Right.
It's about understanding the human element, the strategic thinking, and the adaptability needed to navigate this complex world.
I couldn't agree more. And this brings me to something I find particularly interesting.
Okay.
We've talked a lot about the strategic and financial factors that drive business decisions, but what about the psychological aspect?
Yeah.
How much does the founder's personality, their risk appetite, their vision for the company play into these choices?
That's a great point. We often hear about the culture of a company, but how much does that stem from the very top? If a founder is very control-oriented, would they even consider going public and having to answer to shareholders?
Exactly. Someone who thrives on independence and making quick decisions might find the structure of a sole proprietorship liberating.
Right.
But someone else might find that terrifying and prefer the checks and balances of a partnership or a board of directors.
It makes you wonder if there's sometimes a mismatch.
Yeah.
A founder who's brilliant creatively, but maybe not comfortable with the financial scrutiny that comes with a public listing.
Absolutely. And that's where seeking expert advice is crucial. A good lawyer or business advisor can help a founder understand not just the legal and financial implications of different structures, but also the potential impact on their own role and decision-making within the company.
It's like finding the right puzzle piece, isn't it?
Yeah.
You need the right shape to fit the overall picture. And sometimes you might start with one piece and realize later on that you need to swap it out for a different one to make the whole thing work.
That's such a great analogy.
Yeah.
And it highlights the fact that these decisions aren't always set in stone.
Right.
Businesses evolve, founders' priorities change, the market throws curveballs.
Yep.
It's about being flexible and adapting the structure to suit the new reality.
Thinking back to our case studies,
Yeah.
I'm struck by the different paths taken even within the same industry.
Right.
We had Rip Curl staying private for decades, while Quicksilver and Billabong went public, with mixed results. What can we learn from these contrasting approaches?
It really reinforces the idea that there's no one-size-fits-all answer.
Yeah.
Rip Curl's licensing model allowed them to grow globally without the capital demands of setting up their own manufacturing. Right.
But they were also somewhat at the mercy of their licensees, potentially sacrificing some control over quality and brand consistency.
So it's like choosing a surfboard.
Ooh, I like that.
The right one for you depends on your skill level, the waves you're riding, and your personal preferences.
Yeah.
There's no best board, only the best one for your particular situation.
I love that analogy. And just like a surfer needs to adjust their technique, depending on the conditions, businesses need to be prepared to adapt their structures as they grow and face new challenges.
So for our listener who's soaking all this in,
Yeah.
what are some key takeaways they can apply to their own journey, whether they're just starting out or already running a business?
First and foremost, I'd say don't be afraid to ask for help.
Yeah.
There are experts out there, lawyers, accountants, business mentors,
Right.
who can guide you through the maze of legal structures and help you make the most informed decisions.
It's like having a Sherpa when you're climbing Mount Everest.
That's a good one.
They know the terrain.
They can anticipate the challenges,
Uh-huh.
and they can help you reach the summit safely.
Exactly. And beyond the technical advice,
Yeah.
be honest with yourself about your own strengths, weaknesses, and goals.
Right.
The structure you choose should empower you, not constrain you.
And don't be afraid to revisit those decisions down the line.
Yeah.
What works today might not work 5 years from now.
Couldn't agree more. Business is a dynamic process. It's about constant evolution and adaptation.
This deep dive has been a fantastic exploration of the world of business structures,
It has been.
from the nitty-gritty details to the human stories behind these choices.
And I think it's left our listener with plenty to ponder
Yeah,
as they continue their own journey in the world of business.
absolutely. Thanks for joining us on this fascinating deep dive.
Until next time, keep exploring, keep learning, and never stop asking questions.